Hello to everyone, my name is Gregor Horvat and welcome to our new update, Surfing the Elliott Waves, where I will look at some of the most important developments for this week. This video has been brought to you by Orbex. I will look at the US dollar index versus US yield, then also quick look at the crude oil versus dollar CAD, dollar yen, Aussie, and a quick look at the S&P 500. So Powell has been dovish yesterday. Actually, they will still remain in this hiking interest rates policy, but they will be very careful and they will be most likely going to some neutral stage in 2023. So speculators are looking more into the future. Of course, they are adjusting positions accordingly, meaning that if they see the US yields potentially that could stabilize or even come to the downside, obviously this has an impact on other markets as well. So what we are seeing so far is that the US dollar obviously is also turning to the downside. You can see that I have here in black, and then in orange I have the US yields and the US dollar, and obviously both are currently moving into the same direction. At the same time, obviously the US notes are turning higher. So I think that the US dollar could actually see more potential weakness in the near term, because notice that that's ongoing consolidation. So despite the fact that a lot of majors are currently already trading at the highs versus the US dollar, well, the US dollar index somehow is still holding this support. So I think that this support sooner or later will be broken. Maybe we will have to wait for this triangle to be accomplished in a way till the non-farm payrolls report, which will be another very important event this week. So we will see how this will impact the price action, but of course I think that that the Fed is definitely considering potential recession, and if data will be maybe bad tomorrow, then obviously this means that Fed could stop or slow down the rates, the hiking rates even faster. So for now I will stick with the bearish trend here. I like the idea that we actually here break this support here and then retest it as part of a complex wave 4. So I think that as long as we are below that level, the trend, the intraday trend, the cycles are bearish. However, even on a higher degree time frame charts, I think that we reverse from pretty strong resistance here. We've been carefully watching these levels, and since we have a very strong drop, I think that we have to respect that we are currently moving to the bearish side, or even more importantly to the neutral side. I think that the bulls are currently has seen a top here. Now also looking at dollar CAD. Dollar CAD did not provide any much of the clear price action or impulsive price action, I should say, lately, but with this recent price action from the last two days or so, I think that we have some clarity that could be on the table. Notice that market rally from that low to that highs only in 3 waves. I've been tracking this one pretty closely, but I respected. I was looking at this resistance. I wanted to see if the market will actually break through decisively above this resistance, or we will see impulsive sell-off. What we are seeing so far for the last 24 hours is a very nice sell-off. Okay, this looks like an impulsive reaction. So I think that if we can break this trend line, or if you want, just if we come out of this bear flag, then I think that new lows could be seen here, potentially even for a third leg sell-off into this fib zone here. So I think that for now, dollar CAD could see more weakness. 1.3 or 1.31 could be the next targets, maybe next week, but again, I'm repeating next week because I want to see how this week will finish after the non-farm payrolls report. Okay, because we have seen plenty of times that important data such as this, if this current candle will be fully retraced tomorrow, then obviously I would stay aside. But if this dollar CAD will stay weak here and potentially even break this trend line by the end of the week, then I think that there could be some opportunities on the short side. Also, why I'm covering this dollar CAD, because as you know, dollar CAD is linked to the crude oil, obviously. So higher crude oil means stronger CAD because of their reserves. And what I see so far on this crude oil is a very nice reversal higher. Notice that, or at least on the intraday chart, notice that recently we have seen a nice sell-off towards this trendline support, and this trendline support appears to be like lower trend line of this potential wedge formation. So I was watching for potential bounce, and so far we have a very nice recovery. Also keep in mind that White House has released a fact sheet that, and they established their intention that they will try to refill their reserves between 67 and 72 dollars per barrel, and this was pretty close here in that area. So it's not a surprise to see this reaction higher. It's very obvious that this is actually a chart of their reserves, and it's very obvious that sooner or later they should feel this, and if that would be the case, obviously this could be supportive for crude oil. And if crude oil, as you know, will continue to the upside, then I think the dollar CAD will continue lower. And if you look here on crude oil intraday charts, what I really like here is that we have these 5 waves of decline. Okay, these 5 waves down normally will put a correction in play, but when you know that correction is really already underway, well, you have this broken trend line of this Elliott wave channel. Okay, so when this happens, especially if this occurs with an impulsive price action, then you can confidently say that bottom is in. And whenever you spot a bottom with only one leg to the other side, well, keep in mind that even if this whole recovery, okay, whole move to the upside here is going to be corrective with a limited upside, what you still want to see in these corrections is a free wave structure like an ABC. Okay, so even based on minimum expectations, you should expect an ABC recovery. Okay, maybe this ABC recovery will later on extend and will suddenly become a 5-wave recovery. So no matter how I look at it, I think that in the short term, this recovery should continue higher after any pullback. I see some nice support on dips around 77 to 78 dollars per barrel. So if after this pullback we will see more upside here on crude oil, then obviously this means that dollar CAD will potentially stay here in downtrend. So I really like this pair, and I will definitely keep a very close eye on it next week. Now let's take a look also on dollar yen. Well, why I'm bringing on dollar yen, because as you know, it has a strong correlation with the US yields, and dollar yen is so far one of the few pairs which has already 5 waves down from the highs. So we can count 5 waves down. We have a broken trend line. We observe this resistance area very closely here. So in my opinion, we have to respect what is going on here. Normally when you see a sharp uptrend and then only 3 waves down, then you can expect continuation higher. But when this drop, this reversal is made by 5 waves without overlaps between waves 1 and waves 4, well, usually that's a sign for a top. So in my opinion, I think that after any short-term rally, we will continue even lower. And ideally, this will be resistance here if the trend line will be retested. Okay, so I think that we could easily see this dollar yen after rallies, of course, to continue straight down towards wave 4 here. Also, keep in mind that dollar yen, okay, back in, this was in December of 2020, was one of the first pairs who made a reversal, who broke the resistance levels. This is actually Japanese yen versus dollar, so it's inverted scale, okay, because of a better correlation. So you can clearly see that the dollar yen, okay, back then was the first pair who broke through the resistance or started a new uptrend. And now we are seeing only on dollar yen this one that has these 5 waves down. So again, it could be an indication that other dollar pairs will follow into the same pattern, and that we will see more weakness here on the US dollar, because if this market will continue to the downside, I think that US yields obviously will continue lower as well, and it means that Aussie and other currencies and pound, which have been quite strong lately will also see more gains. Now let's take a look also AUDUSD, since I mentioned it. Well, AUDUSD has seen some very nice move to the upside. It came out of a triangle here, so keep in mind that despite the nice break higher, this is a fifth wave. We could face some resistance here. The first resistance, obviously the very important one, should be around 6970. It was 17. It was this high here when looking back to September levels, and also in that area you have the very nice confluence of these fips. So just be aware that despite this very nice break out of a triangle, this is most likely the final leg of this impulse from here. Okay, so we know that after 5 waves market would make a slowdown, so just be aware of a new pullback before market resumes even higher. But sometimes, of course, fifth waves can be extended as well. So the idea is here that it's a little bit late for any new longs. You better wait on the pullbacks, okay, in this risk on environment. Now let's take a look finally on the S&P 500. So on the S&P 500, I'm still observing 2 wave counts. Either we have an ABC here, which is now testing the trendline resistance, or potentially you are in a wave B, also in a resistance line. So in either case, I think that this resistance may not be so that easily broken. We will see what will happen tomorrow after non-farm payrolls report. But even if this is the beginning of a new recovery, I would be aware of a 3 wave setback before we finally break higher here. Maybe we will see a Christmas rally, who knows, and we will have some nice finish into the year end. But so far you have to be very, very careful here, because despite very nice run here on the bullish side, this is not a breakout yet. Okay, so if you are looking for any kind of opportunities here, maybe look at German DAX. This one is outperforming the S&P 500 and is making some very nice extensions to the upside. But even on that market, the DAX, I think it's better to wait on some retracements, because it was quite extended to the upside lately. Traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.